Fed officials believe their stronger outlook for the economy and expectation that inflation will move back towards 2% will spell a slightly steeper path forward for rate increases over the next couple of years. Minutes from the Federal Reserve's policy meeting last month showed the Fed isn't settled right now on the actual amount of policy tightening that would be needed in the coming years, though Fed officials expect to update their FOMC statement at some point. Now, in March, the Fed opted to raise its short-term benchmark interest rate index by a quarter percentage point and penciled in 2 more rate hikes for this year for a total of 3 rate hikes this year. Now, all participants agreed that the outlook for the economy had strengthened since January, and they expect tax changes and congressional spending will, quote, significantly boost the economy over the next couple of years more than they expected. The members are a little bit unsure about the actual timing and magnitude because there's no historical precedent for how much this type of fiscal stimulus would impact a strong economy. Now, many participants also saw that the labor force participation rate had been higher than expected, a sign of a strengthening job market, though wage growth still remains moderate, which spells more room for improvement in the job market. On inflation, all members expect inflation to move back towards 2% in the coming months. Several members expected that their favored gauge of inflation, the so-called price index for personal consumption expenditures, would rebound in March as so-called transitory factors for drops in prices of cell phone plans eventually fell out of the calculation. And indeed, while the minutes are released with a 3-week delay, we saw this morning that the consumer price index showed that the drop in cell phone prices has begun to reverse course. Now, Fed members also discussed the impact of tariffs on the economy. They're not so worried about aluminum or steel tariffs, but they think that the prospect of a trade war and so-called tit-for-tat actions could adversely impact the economy. Bottom line here, Trish, the Federal Reserve is moving full steam ahead with interest rate increases based on a strong economic outlook and inflation that's moving back towards 2%. Back to you.
Jennifer, thank you so much, and it's good to have you on the Intelligence Report. I know how much work you've done for us behind the scenes, so good to see you out in front of the camera. Thank you.
Thanks so much, Trish. I really appreciate it.